weekend all. Ira Epstein of Linn and Associates with your metals market update, and this is for the weekend edition of Friday, October 18th, 2019, about 2:50 p.m. Central Time. Now, if you take a look, stock market's still got a little ways to go, but you can see it's all red today. We've also had some corrections in the metal markets. The dollar index continues to fall, and I think we've seen a watershed event where the dollar's made a major top, barring some crazy world event that I don't know about. In the British pound, Brexit. Will it even get voted on Saturday? Because the Labour Party is trying to prevent that, forcing Boris Johnson to, if you will, have to ask the European Union for an extension by October 19th. This is gamesmanship at its best in Britain. Then we look at energies a bit lower today. Bonds and notes, they started the day off better, but they're just sort of sitting here. And you know, we're just 2 weeks away from the FOMC meeting. So let's take a look at gold and get a feel for where it's at. And let's start off, because this is the weekend edition, with one monthly chart, and the rest are going to be of daily charts. So on the monthly chart, what we have been doing, and I'm going to step back here. This was the first time, and the market, by the way, had been staying over the 18-month moving average of closes in red for quite a while. The black lines are a Bollinger Band. A Bollinger Band is an algorithm developed by John Bollinger, by the way. And the purpose of it, and it has a large following, is it's an algorithm. And depending on how you learn to study with it, I often look to see, is the market going sideways? Was it in a trend within the bands? It'll only stay out of the band 5% of the time, to the upside or the downside. When the market first gets over it, especially coming out of sideways action, you've got to understand this is like a pipe and you've had a spring in it. The question is it out of there and will it stay uncorked? In this case, it did. Generally, you get a couple weeks in a row, and that's what I'd call that. Watch out. The market could be telling you it's breaking out. So you had 1, 2, 3 weeks in a row through August 30th, actually 3 months in a row, of staying over the upper Bollinger Band. Then you get your price break here that you come back under it. That's perfectly normal. Remember, the market only spends 5% of the time out of it. I count each consecutive close outside of the band, either to the up or down, consecutive, taking away one of those percentage points. So coming into right here, I had 3 months in a row over that. It gave me a 2% chance of staying over it the next month, and then 1% the month after. The market pulled back into it. That's all that it says. The idea is if you're coming in, maybe you can get in better than that Bollinger top, and maybe that's where the pros are taking money off the table. Now the market's running the band, and as you can see, this is where we're at right now. And we're now fighting that upper resistance, which is at 15,1770. In terms of momentum, it's still going sideways, which is bullish, and biases to the upside. This chart is still bullish. If the market were to break really hard, support's back at the 100-month moving average and the 18-month moving average of closes. And if you take a look at the weekly chart of closes only, we peaked out at 1526 and we've been working lower and lower. Now, next week, this average is going to move up. And you can see you're going to drop the 18-week back here and replace it with a higher one. It's recently been moving at about $8 a week on the current tone. So I wouldn't be surprised if it gets up into the 1475 to 77 level. Would not surprise me at all. We'll see if the market hits it. It does not have to. The bias is up as long as the market stays over it, but often markets like to go back to that 18, whatever it is, day, week, month, and regroup from there. We'll see if it does that. When I come to the weekly bar chart just now, this is a bar chart. You can see what the market's been doing, and the pattern is lower highs, lower lows. That is bearish. You'd have to take out 15, 11, 20 to break that pattern, and frankly, if you didn't get under 1458.30 and you did that, you could end up with higher lows, higher highs. So it's always good to know what could happen if that number's taken out. At a minimum, it would break the downtrend, but it could turn the trend up, and it would on the swing line. What else? The fact that you're over this number tells me that on this pullback, well, if it comes in at 1475, 77, you hit 76.60 today. You're going to be right in that range if today's lows are taken out. Take out this high, what happens? As long as you don't take out 1458.30, if it were to take that out, I'd have higher lows, higher highs, and the bias up. With all the moving averages under gold, where would the resistance be? I bring in the Bollinger Band. And right now it's up at 1560, but it's dropping, as you can see right now, about $9 at a shot, $5 to $9. So I would expect it's going to be closer to the 1550 level when we reopen. I get my bearings, that's the important part, and then I look at my momentum. So I have a couple of things at work. Number one, momentum's pointing down. The bias is up, but the swing line is down. What turns the chart bearish? Bearish is just a close, wherever that 18-week average is under it. That's how I'll view bearishness. In the gold ETF, it is very similar to the futures. You've got the swing line down, but you have the bias up, as you can see, because you're over that 18-week average, and momentum pointing down. This is saying the futures agrees with that. And in GDX, the gold miners, lower highs, lower lows. This is a bearish chart right now because you closed under the 18-week average. The resistance is that number at 2754. And unlike the futures or GLD, even if you got up and over the most recent high of 28.38, the fact that you made a lower low, you cannot turn the trend up. You can negate the downtrend, you can't turn it up. In the gold-silver ratio, the bigger picture still favors silver. When the market was over the 18-week average, that favors gold. And the higher the numbers on this bar goes, it means in the perfect world, without commissions or anything, these are how many ounces of silver you need to take to your store and say, may I exchange it with you for an ounce of gold? Well, it's been falling from 93.85 now down to about 84.62. When we look at a silver chart, the first thing my eye goes down to is momentum is down. The bias is up since you're over the 18-week average of closes, but the swing line is down. So most of the metals, they're fighting themselves one way or the other. They're in a corrective stage, or they're trying to establish something different that we don't see. The copper market battleground has been this 18-week average of closes. I think you can see it crystal clear there. I hope you can. It got one shot down to the Bollinger Band. And remember what I teach. When you get down to these bands, whenever you hit them first, it's often a spot pros take some money off the table. It's not a reversal. It's where I find the selling pressure abates in the market. Short covering or getting out of longs takes place. Well, you're fighting a battle right now here. The ugly part was we had an outside week down the week of October 4th. And what I told you is if you take out the high of an outside week down, what you do is you create a bear trap. And the reason is these people get caught. Now you've made the higher high for that week. You often go to the nearest of a main moving average, the 18 or the 100, the closest of, or a Bollinger Band if the market gets over that number. Let's say, assume it happens up at a level here. That would be where it's at. It hit there and it sort of stalled itself is all that's going on. I am not seeing the trend. I see what I call a higher high and low pattern sort of stuck right there. In the platinum market, I see support. Two levels of it. The 18-week average in red, the 100-week, momentum down. I've got the trend down from the swing line, but the bias staying up. This market could surprise you like the gold. Should prices get over 903.10 and not take out this low of 873.90, you'd actually have higher lows, higher highs over the 18-day average. It would turn the momentum up, bias up, trend up as on the swing line. The question would be, what would momentum be doing? And momentum often leads the parade. In the palladium market, you hit the upper Bollinger Band, you backed off, you hit it. I've been telling traders for a long time this has been the strongest market out there. Shortages of palladium around the world, where it comes from, things of that nature, and you can see it's still running. Now the daily chart is losing its momentum. The weekly has not, but again, Bollinger Bands are resistance levels. Last in the dollar index. I question if the dollar index isn't now in a watershed event, a major turn in the dollar index. We've peaked out up at this level. Now, if I come back to this high right here, the high there was 99.30 and a half. And if I come back to the previous high here, it was 99.33. I have lower highs and lower lows. So I should not have this arrow pointing that way. This was from last week and I just forgot to do it. It should be pointing down. That's why I think I've got a watershed event. Got lower highs, lower lows, momentum down, bias down. I can make an argument now that if the market wants to accelerate, these two levels could be support. Resistance is here. I'm wrong in my thinking if you get up over 99.30 and a half. Barring that, this chart looks like a top in my opinion. Now, I'll let you figure out how to get involved. You know, one of the things I start you off with each morning, and I'm talking Monday through Friday, and I even do it like Columbus Day I was doing them. I help you with stopping to second guess. Why? I want to give you what I'm seeing on a chart in a way where I'm actually saying buy here, sell there, do that. Very different than I'm able to do in these public videos. This is for my subscribers. And the idea there is I start off the morning giving you trade ideas, but I'm also going to bring you up on what's going on in the market in terms of fundamentals, because I've already read by 5:15 in the morning, I've already gone through Asian news, I've gone through European, I've read a lot of Chinese newspapers, not in Chinese, the English versions, to get some ideas as to what's going on. I bring you now up to date. I'm now adding what's important for the morning as we get going, about an hour from when I put out the recording, which is 8:30. And I'm going to cover all these markets in this exact sequence for you. Now, if you're viewing it on my website, you're going to see it pops up, stock indices, whatever, as you move the scroll bar at the bottom. But you can also just jump right through it. The idea here, if you're looking for somebody to talk to, think about it that way, and you were sitting next to me, and I'm reviewing that chart with you. I'm saying I want you to buy here, I want you to sell here, this would break the trend, this confirms the trend, and that's the idea. Try it. 26.5 cents a day if you haven't tried it. 30-day commitment. Beyond that, you're not committed. How do you go about it? Go to our website, under the word research. Just click on it. Pull-down menu will come as you're there. Hit morning subscriber video. I answer all the questions you might have. Give it a try. It's not even a tick in gold. It's certainly not even a tick in the S&Ps or any of the other markets like that. I'm Ira Epstein. You have a great weekend, and I will talk to you all come Monday. Take care now.